Tesla stock is up over 1% here on the day today at the time of recording this video, and we have the Holy Grail of good news, or at least the start of what could be the Holy Grail of good news. It has to do with the fully autonomous Robotaxi network. And to be honest, I think Tesla's stock should be up well over 1% based on this news today. But Wall Street doesn't pick up on this kind of news. Thus, yet again today, I think you're getting some really good news, and Wall Street, the algos, they're just not picking up on it. Eventually they will, and when they do, well, I think there's going to be a big catch up in Tesla stock that could be here in the near term, and we'll talk about that a little bit in this video as well. Before we get started with all of your Tesla stock breaking news and data that you need to know today, hit the like button, subscribe to the channel. It's free 99 and costs you absolutely nothing to do so. If you guys would also like to come join the action over on X, the name's Michael Tyler, same picture as the YouTube, should be pretty easy to find, and that's also free 99, so go follow that account as well. Let's share this breaking news today. And again, this is something the algos are not picking up on. This is a job posting from Tesla, obviously. It says a Linux kernel engineer, AI embedded operating systems, and autopilot AI. What you'll do under that category, it says define the hardware, software interactions for our next generation fully autonomous car platform, humanoid robot, and the expanding AI inference use cases. Develop and bring up the system software stack that runs on the AI platform and interacts with various sensors in the car and the robot. And it says pre-silicon Linux bring up to mass production and the next generation AI chip. So what is this saying? Well, it's saying first and foremost, Tesla is focusing on this next generation, essentially Robotaxi network. This is the first job posting of its kind, specifically dedicated to the Robotaxi network. And I think you can credit a lot of this to the improvements that we have seen in FSD 3.1 and now 3.2 that will start rolling out to mostly Tesla employees, but small batches to, retail, if you will, retail Teslas out there on the roads today. A lot of this could be credited to that. I think it shows Tesla thinks FSD is going to continue to evolve at a speed in which you should start building out the platform for the next generation fully autonomous Tesla. Now, this Robotaxi network vehicle, this autonomous vehicle, it's not supposed to have a gas pedal or a steering wheel. This is not the Model 2 we're talking about. It may be the Model 2, but without the steering wheel and the gas pedal. We don't know that specifically. But we do know the Model 2 should be coming second half of 2025, and we have no idea when to expect the Robotaxi network. Why this news is really so potentially impactful and important to you is because when this autonomous platform comes for Tesla, when that's actually a reality, that's where the big dollars are made. And Tesla's already now putting steps in motion to not only develop the Model 2, which is likely to be the Robotaxi fully autonomous platform as well, but they're also getting ready for that platform, trying to create a user interface and develop the overall experience. Now, as I have said previously, I think the Robotaxi network could be up and operational in about the next 2 years. It's going to be a slow rollout initially, likely to some of the cities that already have autonomous ride-hailing services already operating in them. Think Phoenix, Los Angeles, San Francisco, Las Vegas. These are going to be the cities that get the rollout first, just because regulatory approval is probably going to be a little bit easier than trying to go straight to a New York or to a Miami or some cities that don't have ride-hailing taxi services really, widespread in those cities already. So I think this is a huge step in the right direction. And if you read between the lines, Tesla is full tilt on AI and on developing this autonomous platform, this ride-hailing service. And Wall Street doesn't even have this in their models going out to 2030, not even 2040. It's more like a concept project to a lot of Wall Street than something that will actually come to bring profits to Tesla, will come to a reality. And I think that's what Wall Street is really missing here. Now, personally, I believe Tesla is in a transition to focusing less on growing volumes and to focus more on profitability. There's a lot of different reasons for that. I'm not going to rehash all of my reasonings for believing this, but I do think Tesla's going to really put that front and center on the next earnings call, which is going to be on April 17th, just a couple weeks from today. And you might start to get new details on this next generation fully autonomous ride-hailing platform, right? The Robotaxi network. You may start to get information on that. And maybe that makes Wall Street take notice. So the way that I look at it is you have potentially just a couple weeks of a heads up here to say, hey, Tesla stock may not be at these low prices, maybe ever again, following the next earnings. Now, that's a stretch, right? Who knows what happens in the economy? Who knows what's going to transpire next for the Tesla business if Tesla is actually taking a pivot to focus less on volumes, to focus more on profitability. But they start talking about the Robotaxi network and their plans, maybe a timeline for that, which is only my speculation here on the next earnings. Yeah. That's going to be very exciting. And I imagine there's going to be a lot of talk about FSD on this earnings call. And I imagine there's going to be conversations that are brought up about the Robotaxi network, considering a lot of Uber drivers already are just sitting back, plugging in their destination, and letting FSD do the rest. You're already kind of seeing FSD operate a Robotaxi network just with human supervision in Ubers. MKBHD. This guy right here that basically helped put Fisker out of business. He says the VinFast VF8, this is the automaker from Vietnam, I believe, that is now selling their vehicles in the US. He just made a review on it. He says, quote, "It has a shocking amount of similarities with the Fisker. I'll put it this way, ... but it's different." Not really saying the best things about VinFast. Tesla is set to appear at Poland's largest automotive show for the first time. The Poznan Auto Show will be held from April 4th through April 7th. Tesla has objected to Mexico's proposed rules for electric charging stations. Tesla says, quote, "Requiring that a station offer different types of chargers adds technical complexity, creates additional entry barriers, increases the cost of the stations, and is an incentive for new participants interested in offering vehicles in the country not to carry out the necessary development and investment in its production for regional integration, mainly affecting the consumer experience." After 45 years, the last Volvo with a diesel engine has rolled off the Torslanda factory production line. Ford launches the all-electric Explorer in Europe, starting at €39,875. It will be available towards the end of the year. The versions with a larger battery available at launch are several thousand euros more expensive. And pound for pound, the Model Y beats this Ford electric Explorer just in every single data point. Fisker Ocean's prices were just slashed by up to 39% in the US. Sawyer Merritt provides a little bit of clarity why CATL's LFP batteries are good news for Tesla. This is what Tesla traded off of, I believe, 2 days ago, and went higher on the news that CATL and Tesla were potentially looking at an even deeper partnership. Sawyer Merritt writes, "CATL's LFP batteries are less expensive compared to Tesla's 2170 packs. This is why the new Model 3 rear-wheel drive and long-range models utilize LFPs. However, this choice also renders these cars ineligible for the US EV tax credit. Tesla's collaboration with CATL in Nevada might mean that these LFP packs could eventually become eligible for the EV tax credit." So that would be a way of Tesla cutting prices essentially by $7,500 on a wider a range of Teslas and essentially get a free price cut and not sacrifice Tesla's margins in the meantime, which could obviously boost demand for the Tesla lineup. Troy Teslike has recently brought down his Q1 2024 delivery estimates to 420,000 deliveries, whereas Wall Street is still up there at about 474,000 deliveries. It looks like you're set up for a little bit of disappointment coming on April 2nd when Tesla gives us the Q1 delivery and production numbers, but some individuals like Gary Black say that the refreshed Model 3 has cost Tesla in between 30 and 40,000 potential deliveries in the US, and that the markets might look past that. After all, this is a huge gap compared to any other quarter that you've seen. Wall Street's way up here, retail seems to be way down here. If you're already pricing in on the low side, a super low number, if Tesla can just beat that super low number, that might be seen as good news rather than, us being right here, Wall Street right here, and Tesla missing to the downside, right? So expectations, to put it simply, are probably lower, a lot lower than what Wall Street's general analyst consensus estimate actually is. And it wouldn't surprise me even over the next couple of days before you actually do get that number coming out on April 2nd, that you see Wall Street really start to lower their estimates quite a bit. Tesla's vice president for Chinese operations, Teo Lin, just did an exclusive interview with Chinese media, and she said, number one, the Chinese market is a must for Tesla. Number two, we will continue to increase our investment in the Chinese market, and we are doing our best to provide better quality. Number three, the Shanghai R&D Innovation Center achieved several achievements and applied them to global products. Number four, in the future, the Shanghai R&D Center will grow as large as the size of the North American R&D Center. Here you can see an image of Giga Texas Cybertruck VIN numbers, and you're seeing if this is an S-curve, you are exploding higher. So Cybertruck could be a bright spot on Tesla's delivery numbers, and that may be seen as a positive by the markets. After all, hopefully the Cybertruck is selling at a profit, right? Hopefully we're not still losing money on each Cybertruck being built, although you probably can expect that. It is going to have a material impact eventually to Tesla's top line. So the faster Tesla can scale the Cybertruck, the faster that top line will grow, and presumably the faster the bottom line will grow as well. Tesla's official X account here on X shared this video from Jackson S last night. I actually showed this in one of the videos a couple of days ago, but Tesla just shared this and says, under your supervision, FSD V12.3 can drive your Tesla almost anywhere. And that's showing a high degree of confidence if Tesla is coming out and saying that on their main account. Elon Musk also says last night that self-driving AI will be vastly better than humans. Again, showing a lot of confidence, Elon Musk, in Tesla's FSD and how it's going to evolve over time. It's only a matter of time before you get a robotaxi network and honestly have a car that, like Elon says, is vastly superior compared to a human driver. And if you are a Tesla stock investor, that is the holy grail of investing in Tesla, is the robotaxi network. Eventually, Optimus will also play a part in that, but the margins on a robotaxi, network should be large, like 50+%. So theoretically, if Tesla were to take in $50, $25 of that could be going net to the bottom line. That's obviously going to take some time, but you could start to model what Tesla's EPS could look like, and you're not talking about $3. You're talking about $30, $40, $50 of EPS in a year. And just imagine that if Tesla did $50 of EPS in any given year, once the robotaxi network scaled out and really out there for everyone. I mean, Tesla would be selling at a PE multiple of a little bit over 3 today. In simple terms, that would mean a whole hell of a lot of upside from here. And at this point, Wall Street is seeing FSD as kind of a Hail Mary, long shot potential down the line for Tesla. And I think it's more of a certainty. It's a matter of, when, not if. And when Wall Street realizes that, which could be this upcoming earnings, I'm not going to hold my breath for it. But if Tesla does start to put out targets for the robotaxi network and forces the markets to understand that robotaxis are coming, I think Tesla's stock could justifiably go much higher from here based on the profit generation that we will see over time from the robotaxi network. Like theoretically, if Elon comes out on April 17th and says, in about 12 months, we should be able to launch the robotaxi network in select cities. I would expect Tesla stock would skyrocket higher on that. Here on the day today, Tesla is running about 4,000 different ads with Google. This includes YouTube, and Tesla's now advertising on Instagram, on X, as well as Facebook. So the real number of ads that Tesla is running is probably 8 to 10,000. Google Trends data for the Tesla lineup, although it's not finalized, is showing a slight downtick overall. The Model 3 going from 37 to 36, the Model Y from 35 to 33, and the Cybertruck from 35 to 32, as well as the Tesla Model X still sitting around 10. Global inventory numbers for the Model Y going down by about 300 today. About 150 today, which you're still at very elevated inventory numbers for the Model Y. So I want a little bit of clarity on that. We'll see if that does translate into potentially less Model Y deliveries coming on April 2nd. So we'll get more clarity on what's happening here coming April 2nd, likely on April 17th as well. But you are seeing the Model X, Model S, and Model 3 inventories that continue to trend lower, and either the Model 3 is selling very well and they're just selling all of basically what they're making every single day, or they're just not making enough of them. And I don't know exactly the answer for that, but again, we're going to get more clarity on that pretty soon. Over on StockTwits, Tesla's sentiment is at 43 today. Yesterday, it was at 44, which yesterday was a fantastic day for Tesla. And, I think there's a lot of people that have listened to quote unquote Wall Street experts, and they're vastly overestimating how negative delivery numbers can be. And they're really underestimating the importance of profitability. I've seen the steps that Tesla is starting to take towards becoming more profitable. We've all seen them. They've been flying in our face. Does the Tesla team acknowledge that? I don't know. I imagine so on this next earnings. That's at least what I'm going with. That is my expectation, but I clearly could be wrong. I'm not a financial advisor. None of this is ever financial advice, but I think people are so kind of perma-bearish right now that Tesla stock could rally a lot from here just before you get the overall narrative to become bullish again. You're not even neutral. Yesterday, your sentiment was bearish, and today it's even lower. Still bearish. And this is mainly retail investors on StockTwits. Just imagine what hedge funds and institutions are saying. They're really bearish. If retail's at 40, 44, 43, if you had a sentiment gauge for Tesla for hedge funds and institutions, it's probably at like 20. Like 20% of people are probably bullish, 80% are probably bearish right now. That's where I want to be investing. I want bad news to be priced into a stock. I want, upside surprises and good news to come. And when that good news does come, Tesla stock will move much higher from here. That's a fact. You seen yesterday, just a little bit of news and the stock can go up 5-6%. Yesterday, you did see an end of the day sell off. We are seeing what looks like end of the quarter portfolio rebalancing. We'll speak on that a little bit in the next video, but that can have a big impact even heading into the day tomorrow. Message volume today is at 50, which is normal. Yesterday was at 55. So even yesterday, the message volume was high and you still had a lot of bears out there in Tesla. People are like perma bearish right now. And I think that's a dangerous position to be in, especially if you are trading. If you're a long-term investor, you already have a position and you just want to see the stock go lower, I don't blame you. Sure, that makes sense. But if you're like buying puts on Tesla, expecting it to continue to fall, I think you may be disappointed. But hey, what do I know? Participation ratio today is at 54, which is considered normal. There's a normal to high amount of people that are or accounts that are talking about Tesla, and that's typically a good sign. Option activity from hedge funds and institutions today is also quite positive. You had 382 orders totaling $76.34 million with a positive order value of 62%, which yesterday's positive order value was 59%, so that was, pretty good as well. Today looks even better. Call activity is about 52% of the volume. Put activity is about 48% of the volume. So more calls being bought today than puts, but it is pretty close, I will say that. Short interest has recently just jumped again in Tesla. And when you're talking about short interest in Tesla, 3.7% is huge on a, $600 plus billion company. And this is the highest short interest that we have seen in a long time. Okay, go back, highest short interest we've seen in 6 months, highest short interest we have seen, highest short interest we have seen in over a year. The only time we were comparable to this was June of 2023. And I mean, let's see what happened around that time. What happened in June of 2023? Tesla stock was about $200 per share, ended up rallying all the way to $300 per share. It held $200 per share besides this brief period here in October of 2023 up until, really this gap down that you've seen on January 24th. So, I mean, last time this happened, Tesla stock held that price for months. For 6 months, it held that price. I don't know if that's going to happen again necessarily, but you are prone to see a short squeeze or vulnerable to see a short squeeze here. And it looks like shorts are even shorting more Tesla stock today with 9.87% cost to borrow fees. Cost to borrow fees largely dictate around supply and demand. If there's not a lot of supply, if there's a lot of demand, boom, cost to borrow fees go higher. And you currently have 102.53 million shares that are currently sold short. And we'll talk about this a little bit more in depth in the next video because it's going to play into the overall theme in which I expect Tesla's earnings are going to be positive and we're going to get an upside surprise. Whereas, Tesla's fallen 10% 4 earnings in a row. Could it do that again? Of course, but everyone's going to think Tesla's going to fall after earnings. That's precisely when you might get the opposite reaction. Here on the day today, you do have the percent of stocks above their 50-day moving average up almost 6% today. This is mainly because 10-year treasury yields are selling off almost 4 basis points. That means if yields are selling off, people are actually buying the bonds. So if you look at TLT's up almost 1%. A lot of this has to do with the end of the quarter portfolio rebalancing. The S&P's up close to 10% for this quarter. Bonds were only up about 1%. So if your mandates are way out of line, you have to rebalance by the end of the quarter. And that's likely another reason why you are seeing this huge, and I mean huge, outperformance of the Russell 2000 today. It looks like people want to get invested in the Russell. There's definitely some selling taking place in the NASDAQ and going into the Russell. The NASDAQ is up 0.17% today. The Russell 2000 is up 1.5% today. That's a massive outperformance. Here today in After Hours, we are going to be getting earnings from Rumble, Urban Grow, Restoration Hardware, Braze, Playboy, Greendage, Verint, Franklin Covey, Sprinkler, and HB Fuller. But none of these earnings are going to be too important. Restoration Hardware is an interesting one. They can move quite a bit, but the markets are pricing in a huge move for Restoration Hardware. The options are very expensive. With that said, that's mainly going to conclude this video. I plan on going over a more in-depth technical breakdown in the next video, but look what happened today. At the low of the day, what was the low of the day so far? $176 per share. What happened? You bounced right at this trend line, which leads me to believe this is going to serve as another level of support. This is really confirming that to me here today. And the fact that you did rally so much from the low of the day today is typically a good sign when you get a candle like this. And then your 50-day moving average is your next stop, up to about 188, 50-day moving average at $188.10 per share. I said this before, if you get above this trend line, you're likely going to 188. Just happens to be your 50-day moving average is also at $188 per share. So I think it's only a matter of time. You probably got about $8 of upside left here. And then I think the bigger test comes delivery numbers that will be coming out as well as earnings. That could send the stock much higher or potentially drop you back into this range that we are at right now. But I still am expecting some upside here, probably throughout the rest of this week, to be honest. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.